Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. Do you want to invest in India's top commercial buildings and malls to get the best returns in real estate, but still feel that you do not have crores of funds to really invest in real estate as well? Well, then you should be thinking about REITs. REITs is the most popular and the most recent way of how you can get the diversification of real estate, yet not having to spend lakhs and crores of rupees as well. Now, what exactly are REITs? That's something that we should be able to understand as well. And the kind of investment that you need to make in REITs is at a fraction of a cost of a massive real estate in real life. So for a real estate property in commercial projects, maybe you would have to shell out crores of funds. But here, for one unit, you can just start off with an investment of as low as 10,000 rupees when you invest in REITs. And that's possible through this new age investment platform. So what is REIT? REIT stands for Real Estate Investment Trust. Think of it like a mutual fund for properties actually. So instead of pooling in money into stocks or into bonds, REITs actually collect all the money from investors and puts that into real estate like office complexes, warehouses, shopping centers as well. And in return, the rent that is earned from these properties is actually distributed to all the investors as dividends. By law, at least 90% of the income must be distributed to investors at large. Now, REITs are also safe instruments to invest in because these are regulated by SEBI and are listed on the stock exchanges like NSE, making them easily accessible to all the investors. So your returns come from two sources here. One is a regular rental income, the dividends, and the other one is capital appreciation of the REIT units as the prices rise as well. So now when you invest in such REITs, the quality of investment is also guaranteed because only the very few real estate investment trusts are listed on the Indian exchanges and are available to investors, and those invest in high quality commercial real estate as well. So you can go ahead and look at all the options that are available. So let me help you understand what are the types of REITs available in India to get better clarity on the same. So let's start off by equity REITs first. Here you can own and rent out commercial properties. There's also something called as a mortgage REIT that provides loans to developers or invests in mortgage-backed securities. Then the third aspect is hybrid REITs, which is a mix of both. Now, the next one is public REITs, which are listed on the NSE. That is something that is easily accessible to a retail investor like you and me. Private REITs, however, are only available for institutional investors. So now the question must be coming in your mind, but how do I go ahead and invest in a REIT? What is the process? Well, 4 easy steps and you can definitely invest in a REIT. First, you need to have a demat account, open one with any leading brokerage house, then pick a REIT for your own self, which are listed on the NSE. Examples include names like even Embassy Office Parks, Mindspace Business Parks, Brookfield REIT, or a Nexus Select Trust as well. You can buy the units of these trusts directly on NSE just like any stocks. Then you could also explore mutual funds or ETFs that actually invest in REITs if you do not want to directly invest in any particular REIT and you want a diversification there as well. So there is an option via ETF and mutual funds to invest. Next, you should definitely track the performance of such REITs before investing. Returns usually come from rental income plus any price growth like I mentioned. So Indian REIT market has also grown rapidly since its launch in the year 2019. Collectively, these REITs can actually have distributed about 4,259 odd crore rupees in the first 9 months of FY25, marking a 15% year-on-year growth from about 3,700 crore rupees in the 9 months of FY24. That's what is the latest data from IRA has indicated as well. Now, with these 4 listed entities, like I've already shared with you, Embassy Office Parks, REITs, you also have Mindspace for that instance, you also have Nexus, and you also have Nexus Select Trust like I mentioned to you, and also Brookfield India. These are the 4 primary trusts that you can actually invest in as well. Now, how have these performed? As of May 2025, the top REITs in India have collectively managed assets worth over 1.6 lakh crore rupees. So in case you have one unit invested, at least a quarter of this 1.6 lakh crore rupees is what you are exposed to. So any growth in that huge market is likely to reflect in your own unit as well, and that has been seeing a strong gaining interest from all of those who want to invest in REITs in India as well. But let's also try and understand what are the pros and cons of investing in REITs. So let's start off with pros first. You do get a regular dividend income, like I already mentioned. There's an also easy liquidity because you can easily buy or sell your REIT units on NSE, just like how you buy or sell stocks on an everyday basis. You do have a steady income. You get regular payouts around 6 to 7% annually. There's also a diversification into real estate. Your money is spread across the top commercial properties, office parks, business hubs, etc. There are no hassles, no stamp duty, no tenant hunting, no maintenance. And this is also transparent and SEBI regulated. But the cons are that units are still subject to stock market volatility. So you should be prepared to see your money going up and down on an everyday basis. Now, apart from that, there is also limited growth capital as compared to equities. But look at it in this way. Even real estate does not grow as fast as equity. So you have that aspect to keep in mind. Dividends are taxable. There are no exemptions there. So keep an eye out on that. There is also a high management fee and a limited number of REIT options in India as per the cons. Now, the tax rules that you should know for dividends are that dividends are added to your annual income and are taxed as per your slab rate. Short term, you have a capital gains tax of 15% if you sell your REITs within a year. Long-term capital gains are 10% on profits above 1 lakh rupees if they are held for over a year. Now, for international REITs also, there is an opportunity for there. The LTCG applies only after 3 years and is taxed at 20% with indexation. So, if you've always wanted to step into real estate but not having to really think about or have the headache of buying, managing properties, then REITs might just be your safe way of investing in real estate into India's booming commercial property market at just a click of a button.